Hi, my name is Nelson Alvarenga. I'm a professional real estate broker that lists and sells homes with Alvarenga Realty, which is my own brokerage. And I've been a realtor since 1997. I was actually with Century 21 for 10 years. And also, I live in this beautiful community of Villagewalk here in Lake Nona in Orlando, Florida. So today I want to bring you once again a market update of the real estate market here in Villagewalk. So right now I'm looking at the MLS and nothing's changed, okay? For the past 3 days or so, we've had 4 properties that are actively for sale, and out of 1,400 homes in Villagewalk, and there are only 9 that are pending, the same 9 that have been pending. So today's Monday. This week hopefully there will be movement there, and I'll be able to bring you the update on that. But today I want to talk to you about cash offers versus offers from with a mortgage or with a loan that the buyer will get. So if you're a homeowner, if you're a seller trying to sell your property, you can get right now a cash offer. You can also get an offer that where the buyer is going to get financing. They're going to get a loan through a mortgage company, credit union, or wherever. Okay, what's the difference there? Well, cash offer is really clean. That means that whatever they offer you, you ask for a good down payment, good deposit, and you go to closing in, let's say, 30 days later, and usually there's no hassles on that, okay? There's no bank involved, there's no appraisals or anything like that. Now, if the buyer gets a mortgage loan and you as the owner, as the seller of a property here in Villagewalk, you accept that offer, well, that offer is subject to the appraisal that the credit union or bank or mortgage company that's doing the loan for the buyer will appraise your property for. So the way it works is, they send an appraiser to evaluate your home. Let's say you've agreed to a sales price of $800,000, and then the appraiser comes in and he says, no, it's only worth $725,000. Then at that point, you've gone through the process of waiting to close on this deal. You're about to close, and you find out that the appraisal didn't come in right, and then the buyer wants to renegotiate, back out of the deal, or ask you to lower the price to the $725,000 in that example. So in order to avoid that, if the buyer is getting a loan to buy your property, you want to negotiate up front that if the appraisal comes in low, whatever low amount it is, that the buyer will make up the difference out of their own pocket. They will make up the difference and still be able to buy the property, okay? That way, they're not trying to negotiate with you 30 days later. So you arrange all this up front, day one, before you actually sign agreeing to sell your property. So there's 2 ways to do it. If it's a cash deal, well, it's a lot easier, obviously, but if the buyer's getting a VA loan, FHA loan, conventional loan, whatever they're getting, then you got to be careful so that you don't go through the hassle of the deal falling through 30 days later when it's close to closing, and then you got to put your property back on the market, and it's a hassle to have to show it again. If you have it rented, the renters don't like that. If it's your, if you're living in the property, then it's a hassle for you as well to have to show it, have an open house and all that. So you want to avoid all that. So that's the tip for the day. Thank you.